Welcome to the Business Hub.
Started at
Hello, you're welcome to the Business Hub, and today I have with me again no less a person than Mr. Isreal Iyamu. He's a financial expert, and we've been dwelling on building black wealth in North America. So today, I believe that in this episode you will be able to learn so much, and I believe this is a section that will illuminate our minds to certain financial tips that will change our lives. And last time we talked about financial foundation. So today we'll be delving and making sure that what few details are being passed across for our consumption. And I'm sure that it can only get better. Mr. Isreal, it's nice having you on set again today.
Thank you very much, Prince.
Looking good is good business.
Yeah, you're looking good too.
I'm learning work, right?
No, yeah.
You said no. How are you?
I'm great.
Well done. Nice having
you.
you.
Thank you very much.
Okay, so last time we talked about financial foundation and all that. So today we'll be glad to hear the types of foundation and possibly as much details that you can give us in the time that we have.
Okay, last time we discussed about the financial foundation.
Yeah.
And just to recap, I mentioned that we have 4 layers, starting from the foundation itself,
yes,
which is protection.
Yes, sir.
Then on top of that protection, we have the debt management. On top of the debt management, we have the emergency fund. Then on top of that, we have investments.
Yeah.
So today I will be talking more on protection, the area of protection.
Okay.
Talking on that, I mean, life generally is all about risk. So why protection? Different type of protection. Life generally is all about risk. Whether you like it or not, you are taking risk one way or the other.
That's right.
And there are 3 categories of risk. So that you are having risk avoidance, or you are having risk mitigation or acceptance. Then the third is risk transfer. So if you look at the 3, where do you think is better? Because life itself is all about risk. Somebody that woke up in the morning and saw the snow and say, oh, the rain, the road will be so slippery, I don't want to drive because I'm trying to avoid accidents. That's risk avoidance. But you have a transaction that is worth millions.
Yeah.
You need to still go and drive. Or do you want to mitigate the risk and say, okay, I might rather do X, Y, Z. Do I have a winter tire? Or do I have a proper windshield that, then that is mitigating the risk. Okay. But risk transfer means you are passing the risk from somebody, from one person to another. So that's where I'm going to do it today on the protection.
Wow.
That's where the risk transfer is important.
Okay, so tell us.
So we have 2 types of protection generally in North America. We have the term, categorizing them into 2 major groups. Okay. We have the term insurance and the permanent insurance. Breaking it down and quickly, the term insurance, like as it's defined, term is terminal. All insurance are important. That type of insurance is a coverage that you can access huge amount of coverage, and the contribution you make or the premium that's usually called is usually small. You can actually get $1 per day for an average age male or female, a non-smoker, and that $1 per day or less can cover huge amount of coverage. However, it's terminal. It could be for 5 years, it could be for 10 years, it could be for 20 years, it could be for 25 years. And the insurance will cover you for that period. If nothing happens, within that period, all the contribution you have made, that's all, it has gone. There's no benefit. So the only person that benefits from a term insurance is if the person dies within the term. So it's the beneficiary actually that benefits.
Okay.
So the advantage is that for somebody that is having a money or doesn't have much in terms of payment of contribution or premium, that is the best for the person to start with. However, most times, whereas where the disadvantage comes in now, some people will outlive it. In fact, statistics show that only 2% actually benefit from a term coverage. Okay. Another type of term coverage is the one that most of us, when you speak to some people, say, yes, I have coverage. I'll say, let me see what type of coverage do you have. Going to check, they have group insurance.
Okay.
The one they have at work. Most people are, they're employed, right?
Yeah.
Or maybe they are in business or where they have their own personal. So that group insurance is like a term insurance. In the first place, the insurance does not belong to you. It belongs to the organization. And medical questionnaire and all those kind of things are not asked during the process. So because a group, and for a group insurance, which is like a term insurance, you only have that coverage while inside the company or inside the employment. The moment you leave, you don't have a coverage anymore. In fact, during the pandemic, a lot of people were exposed because they've worked for a place for like 20 years or more. Some started working at the age of 18, where they would have gotten an insurance for themselves, but they relied on their company coverage. And when the pandemic came, companies had to lay people off because there were no much activity going on, right? And that's where they became exposed. In fact, I have a friend that worked for a particular company for over 25 years. At the time, during the pandemic, he was asked to go first, pay severance quite well, but he discovered that he doesn't have any coverage. That's when he realized that he has been living on something that is not really strong enough.
Okay.
And that group insurance also, the employer has the right to change the terms of the coverage at any time without recourse to you. They can change it at any time. And like I said, if your beneficiary can only benefit from it if something, either by way of death or disability or something, happens to the person while still in employment. That is for term insurance.
Okay.
So in as much as it's very affordable, which of course will be good for certain people in terms of their ability to pay, coverage is better to have than not to have anything at all. The other type is the permanent insurance. The permanent insurance has two types of permanent insurance. One is the whole life, and another is the universal life. Okay. Each of them has cash value attached to it. The premium could be more, but for the whole life, the investment is taken care by the service provider. For example, if you have a whole life product for a particular insurance company, they do the investment on your behalf. Unlike the term insurance, there's no investment.
Okay.
It's purely death benefit or what it has to do with cost of insurance, right? But on the permanent insurance, which is the whole life or the universal life, is permanent, it's for life. The term insurance is, you can use term insurance actually. Some people might want to say, oh, term insurance is not good or is good. No, both of them have their own positive and negative. For the term insurance, for example, you can use it to cover things that are temporal. For example, you have a student loan that you are paying down. You can say, okay, maybe you are going to pay that in an year, or the mortgage, which is very popular among our people.
But all these are life insurance.
All these are life insurance. So the two major, like I said, term and permanent. In the permanent, they have two types, the whole life and the universal. So for the term insurance, you can use it for things that are terminal. Like, for example, your debts. You are paying down debt, like mortgage debt and all that. That's one of the biggest debts most people have. And you can use it to pay down, what's it called? Like I said, for things that are terminal. It's also for income protection, for education, children education. Maybe you have a student loan you are paying down, or for your children, things like that. So it's terminal.
Okay.
However, after the term, it goes, and you may outlive it. We operate to live long.
Gotcha.
However, if the person dies within the term, then the beneficiary can get 500, 1 million, or 2 million, as the case may be, whatever the coverage amount is. Okay. But if the person outlive it, there's no more, there's no single dime goes to that family. So for the permanent insurance, this one is permanent for life. It's for permanent things, right? Things that have to do with maybe things you are passing for your something you are contribute to your alma mater or whatever, charity. You know, taxes. Those are things. I mean, people plan for taxes because all the property you have at probate, there are tax implications. That's another topic altogether, which we might deal with during the process. Okay.
Now, because of our time, so talking about protection.
Yes.
So I can see you are dwelling more on the insurance protection.
Yeah, insurance protection.
And you've talked about life insurance.
Yes.
You know, which has the term life, the whole life, and the universal life.
Yeah.
Now, the aspect of health insurance and disability insurance. So, do they have a place in this, or they are separate as well?
No, they have. They are all part of protection.
Yes, sir.
But I'm just capitalizing on the major. Right, health insurance, disability, they are all part of coverage.
Could they be tied to life insurance?
Yeah, like you said, it's health insurance.
Health, yes.
Health and dental, that's what it's called. You want to go and take care of your teeth, acupuncture, massage, all those things are, those are lifestyle, right? They are important, but they are lifestyle. And if you have them, it could save you some bucks. It's even beneficial for people that, they have prescription drugs that they pick up all the time. If you are somewhat healthy and you are paying for that every month, it might not be too beneficial. But if you have family and you have children, so it's good to also have it.
What's the difference between disability insurance and accident insurance, as well as critical illness insurance?
Okay. You are bringing a lot of things now. And so, like you said, disability is for disability. And there's that definition that has to do with disability too. There's permanent disability and all that. So disability.
Critical illness.
Yes. Disability is limp.
Yes.
Loss of limb or whatever.
It's distinct on its own.
It's distinct.
Critical illness.
So for disability, we usually you can get it as a standalone, or you add it as a rider.
Okay.
You have a life insurance, you can add it as a rider. Okay. If the person already have a life insurance, you can buy a disability insurance as a standalone. And some also have disability credit. For example, for those that have mortgages, right?
Okay.
So for disability credit is if the person is paying for his mortgage. So you can take a particular disability credit and add to it as a rider, right? When you add that to it, if something happens by way of disability, instead of the bank coming after you to pay the monthly premium, now this person is alive. Those things you just mentioned, they are living benefits.
Okay.
The person is alive. This is just disabled.
Yeah.
So the bank will take the disability credit. So that's where disability, whatever comes in. And there are different categories. I don't want to go into that so I don't confuse my audience. The critical illness, there are 25 or 26 critical illness conditions.
25?
26, 25. There are about some which say 26, some say 25, but most insurance cover for 26.
I would,
critical illness condition.
Critical illness condition.
Yeah.
Would you be glad to start with this in the next episode? Then you give us the benefits for protection.
Okay, that would be nice.
That would be nice?
That would be nice.
That's a deal. So viewers, thank you so much for joining us today on the Building Wealth for Black, the Black in North America with Isreal Iyamu. And like you know, this is the Business Hub. And we are glad to have you today. I hope you are blessed. Have a great day. Thank you.
Hello, and welcome to the Business Hub.
Started start acting